Hello and welcome to Sectors Up Close. I'm Ramzan Karmali. Our topic today is US healthcare stocks, and my guest is Matt Miskin, Co-Chief Investment Strategist at John Hancock Investment Management. Healthcare stocks are commonly viewed as anti-cyclical, with stable long-term outlooks given an ageing population. And that hasn't generated returns for investors, with the Healthcare Select Sector ETF, for example, treading water this year when compared with the outsized gains in technology stocks. This fund, like its index it tracks, contains healthcare providers, drug makers and equipment makers. The worst performer here by far is Pfizer, which has lost about 1/3 of its value so far this year. Eli Lilly, on the other hand, is up 50%. But some recent analysts suggest that the sector is an attractive opportunity at current prices. Well, let's find out if today's guest agrees. Matt Miskin from John Hancock. Matt, thanks so much for joining us. Well, let's start with that. Do you agree with that analysis? Is now a right time to buy healthcare stocks?
We think it's oversold here and washed out in terms of sentiment. The valuations are attractive. It's trading at about a 10% discount to the overall S&P 500 forward PE ratio. It's got a return on equity of about 20%, higher quality part of the market. Hasn't gotten much love, but we actually think it's due for a rotation in the market as investors look for more defensive, higher quality options as we go further through the year.
But the dividend yield is pretty paltry on healthcare stocks, around 1.5% to 2%. So is it really worth it?
So the dividend yield is pretty much in line with the broader S&P 500. The yield in most markets have come down. Fixed income's got a lot of yield. Unfortunately, equities doesn't. But what the healthcare companies we're seeing do are they're reinvesting in the business, looking for quality growth options, buying back shares, and finding other ways to fortify their balance sheets. To us, that are all good things to do with capital. And at the end of the day, in a more defensive environment, strong balance sheets, high ROE are characteristics that we think will be favorable.
Drug makers in particular have faced some headwinds in recent times with the lack of interest in COVID vaccines and also with the Biden administration cutting the prices on drugs for Medicare. Are these risks worth taking?
So the analyst community is looking for negative earnings growth of nearly 13% this year. So a lot of that negative news or sentiment is already baked into the analyst estimates and the valuation. So not only are the valuations on a PE ratio low, but also the E is low. So if they're able to beat, and we've had over 80% beat rate in Q2, and we think over the next several quarters, they'll be able to beat some of these lower bar estimates. And that's where you usually get the best type of reversion in stocks, is when sentiment's already pretty washed out.
Well, let's have a look at healthcare providers. What's your overall view on what's going on with them?
Secular story is very positive with demographics. It's going to be a meaningful component of costs and expenses of just consumers more broadly. We think this is something people need versus what they want. More defensive characteristics, higher quality balance sheets, strong earnings growth over the long term. We think it's a secular positive trend that is on sale today.
Now, what would you do? Would you look at the ETF, the XLV ETF, or are there stocks that you like instead? I mean, which stocks would you go for?
When you think about the sector composition, you're going to also be picking up things like biotech and life sciences and smaller cap growth companies that tend to be reliant on low interest rates. To us, those companies are at risk as cost of capital goes up. So we would differentiate somewhat, lean more into pharma or healthcare services. Those are the two largest industries in the sector, but move up in cap, move up in quality within the healthcare sector. It's going to give you a little bit more dividend yield, higher ROE, better balance sheets. That's another way to consider the implementation of the sector in a portfolio.
Matt Miskin from John Hancock, many thanks for those thoughts. And that is your roundup of the US healthcare sector. I'm Ramzan Karmali, and this is Reuters.